Welcome to SWE at 2:35 p.m. Central Time. I am Andy Schrepfer. Some call me the Walkin' A. If you follow me on Substack, thank you very much. walkina.substack.com. And if you are at a browser that you can use while watching or listening, you should be at www.swe235.com. And what you'll notice immediately, if you're on mobile, you'll see a top to bottom, obviously, as you scroll, starting with the incline. Middle section, and then followed by a miles per hour. What we do is translate stock charts into cardio workouts on a treadmill or on a bike. And the way that you can get to know this is that a stock in general as an asset class is supposed to go up 10% in a year. That's represented on your incline. 10%, every 10% of a year-to-date incline equals 1 degree on the treadmill. So simply put, if you want to go to 1 degree incline on your walking pad or a small hill if you're outside listening, or if you're on a wonderful treadmill, take that baby up to 1 degree. And the whole purpose of translating a stock chart to a workout is that when you're working out, you have fitness zones 1 through 5. And fitness zone 1 is meant to be at least, in my opinion, 100 watts. And you get to 100 watts on most treadmills by going 3 miles per hour. Why 3? Well, if you do the 2-3-5 test, where you go at 2 degrees of incline at 2 miles per hour, then 3 degrees of incline, 3 miles per hour, then 5 and 5, 7 and 7, you'll find out where your body calibrates watt-wise. And generally speaking, a fitness zone 1 casual walk will be between 2 and 3 miles per hour. And what we found is that 32 watts are generated per mile per hour. So if you're going 3 miles per hour, 3 times 32 is 96. And what I found with incline is that each degree of incline adds 4 watts. So at 96 from 3 miles per hour and 4 from 1 degree, add those together and you get 100 watts. So right now, let me take myself up to that gradation. And here we are at 3 miles per hour and 1 degree of incline. So we are going the market pace. But is the market anything of average these days? No. Just had one of the world record IPOs in terms of capital raised, Cerebras. There's probably many ways to pronounce it. I may not be pronouncing it right. But while they were ringing the opening bell, stocks opening up almost doubled. So interesting opportunity for there to be the first ever secondary offering with that much demand. They obviously didn't do a secondary offering while they were there. They had the capacity to, and literally everyone that was on TV talking about the IPO said don't buy it in the aftermarket. So lo and behold, the stock opens at 385, trades down to 300, trades down a little lower. The market will determine fair price. Pardon me for the cough. As you see other stocks moving, you'll look around and see what Intel has accomplished. It recently finally took a pause of 10%. So what we're trying to measure is how can stocks move and then translate that into a workout that you can do. So one of the ones I wanted to do today was ServiceNow. ServiceNow's last segments have all been under 20%, up less than 20%, a reversal of at least 10, but less than 20. It's done that for the last 5 segments. So if we were to do the workout of ServiceNow as cardio blocks matched to a song, we'd still be walking at a similar pace to a couple degrees of incline and actually decline in this case. The stock's been down year to date. The software stocks as a category have been horrible. And one of the drops for ServiceNow this year was 30%. So if you are on a treadmill that goes down, or if you're outside listening, you want to find a hill that has a slight decline, and that's what you'd want to be going the pace of the decline or the incline. But basically, you're still doing a zone 1 or zone 2 segment. So it's not that hard, and not only is it not that hard, the whole point of learning this discipline of the replicating the energy of a stock with your workout is to see that it is rare for your body to want to go to too far of an extreme without having a break. And in every class that you can go to at every wonderful gym, they're going to give you those breaks in your blocks. The whole point of training is to build up your endurance so that you can go farther on your sprints, faster on your sprints, but you still need that recovery in between, so your body can rejuvenate some more energy to go. Same thing with stocks. The person that's buying a stock aggressively needs to take a pause because they run out of money for the time being, and then they want to harvest gains. So the stock takes a pullback as they sell off to take profits and wait for some new buyer to come in. It's the same concept. And the more you think about it, the more you might want to go see a stock in every workout that you do. But ServiceNow, let's talk about that one. So recently it had gone down 35%, went up 20%, went down 14%, went up 11%. It had these movements back and forth that's starting to peter out in terms of the excessiveness of the moves they capture on the short side or a long side going up. And in the case here, a couple weeks ago, we had NVIDIA's famous CEO bragging on stage, the ServiceNow CEO, saying that the stock is even massively undervalued. I want to say he said something like 10 times undervalued. For a $100 billion company that's got amazing margins, an epic client roster, and just an overall great technology, many people just believe that anything software is going to be replicated by AI, and hence enterprises will stop spending on it. Well, lo and behold, it looked like it had been done zigzagging around a bunch of zone 1 segments. So I took a flyer on the double longs, NOWL, but if you just bought the stock, you're making a bet on software stocks being punished for at least the time being. So we can see how enterprises are actually going to react as they go through renewal cycles and new buying cycles for that matter. How many people are doing test runs of different automations to avoid renewing different software contracts? That's what they're trying to figure out. How much stability is in the revenue and profit stream of the software companies that are out there? So in this case, I got lucky and the stock has started to turn around. But in terms of a workout, you went from a decline to a little bit less of a decline as the stock tries to get out of the year-to-date return that is sour right now. And actually, if you look back at the last 5-year return, ServiceNow is actually down 5% in the last 5 full years of trading. But guess what? Today, stock is actually up, guess what? A little over 5%. So for those that have owned it for a long time, hopefully you've traded in and out. And if you have owned it for 5 years, well, at least now you're about to turn a profit again. And according to Donald Trump, his portfolio, which was released this week, you find that it's one of his top 20 holdings. And say what you will about his portfolio and his ability to invest, I think he's being at least transparent, like everyone is trying to be these days. There are many ways to make money, one of which is in stocks. And with our taxpayer dollars, we have a huge profit as a country in Intel. And Donald Trump's portfolio has, I want to say it was 3 million shares, $3 million worth. Either way, the point is it's a top 20 holding. So you have the largest company in the world validating that this is not going away. And you have enough investors now saying that this might be done. And not only is ServiceNow starting to turn around, there's a number of software stocks, all that have been beaten down like crazy. So if I take myself to a decline, you'll notice my energy level just went down a little bit. The sound of the treadmill went down a little bit. Same thing with the stock. When it's done going down, it gets boring. And boring is the zone 1. But as this stock starts to turn around, another stock that I owned this week, Rackspace, it's up 500% year to date. 500%. So translate that into a incline. There's no treadmill that goes straight up. So you can't do the embodiment of that. So that's called a max out. You're trying to do the translation of a stock like Rackspace, or basically any stock that goes over 100%. In the opening episode that I did last Friday, we talked about that. If you've read the article, you'll see that there's only a couple dozen stocks that have gone up over 100% without a reversal. So Rackspace is one of them, Intel's one of them, and again, the original one to set, I think the definitive record is still Life 360. LIF is that ticker. So if you're interested in all of these topics, next week I will be doing an actual workout straight through with music, like you can do in the screen in front of you. You're going to want to tap around this screen. Do it live. I'll be able to share my screen with you in the future on this. If you are to hit the broadcast button for any stock, it will make the incline be larger and the miles per hour be larger. But in the middle, the largest number you see in the center is the watts. So you can do this on a bike, and we'll have an interface for this to be on a bike by next week as well. You see the stock, you see the current price, and you see the beats per minute, as well as a clickable button to play the song that matches that beats per minute. So if you really like just zoning out and not listening to someone like myself talk, but you just want to have that experience of what's the energy like in the stock. And obviously you can feel it with the pace of your legs, pace of your heartbeat. You can feel all that, and if you'd like to have that matched with the song and zone out, you don't have to use the song that I picked. I've shown you the BPM. A simple search with AI will give you other options to play, and we will be presenting you with a playlist for the entirety of a stock chart. And if that sounds fun for your company or someone else's company, go to tikstk.com, TickStock. Yes, it rhymes with TikTok. It is not TikTok. It is meant to be a place where any company can choose to not only pick songs that match the BPMs, that match the cardio equivalent of their stock's trending segments, but the idea would be that someone like myself or an executive at the company or an analyst that follows the company or any of the wonderful people that are on the Stock Twits community. It was wonderful to be out at the Cash Take Awards at the New York Stock Exchange last week in New York. Thank you for hosting that and for all the wonderful people from Howard on down that I met with on this team. Great organization, great community. Happy to bring some of them over to join the Stock Workout Exchange. And seeing the financial fitness machine here, we are 15 minutes in. So I'm going to sign off and wish you all a happy weekend and be excited to get back on the treadmill with you next week. And if you happen to be in Dallas, that's where I'll be Wednesday for the Texas CapCon, Texas Capital Conference. It happens to be a second annual, and it happens to be 2 weeks before the Texas Stock Exchange opens. Very exciting development for all of capital markets to have a new party competitor in what I believe is the greatest state. Happy to have lived there. Happy to be cheering on the San Antonio Spurs tonight. But good luck to my hometown Minnesota Timberwolves. And finally, find a place where he can win a ring, just like Kevin Garnett did. Look forward to seeing any of you that want to join me at Lifetime, 6 a.m. at the Highland Park in Dallas, right by SMU's campus where that conference is being held. Hope to see you there, and I love that you joined. Thanks so much for getting in a few extra calories, and I look forward to next week when we start doing one stock, 5 songs, 5 segments, and you'll be able to feel the energy as I try to take pauses and tell you my opinion of what happened in each of those segments, meaning what caused the buyers to take over more control and have more capital to deploy to take the stock up from a decline, and then what was the peak point that there were no more buyers and enough sellers that actually took it down a full 10% or more. Thanks so much. Happy trading. Happy financial fitness to you. See ya.